Good Friday morning, everybody. It's Jen and Adam back with another market update. Adam, we got some great positive news Friday morning from the Bureau of Labor Statistics. The unemployment rate for the first time since March is now down below 10%. Not much. It's at 8.4% this Friday, but that is really good news that it's going down. We're seeing it continually go down even lower.
Yeah, man, what a good trend for everyone across the country who has been struggling for months now with just crippling high levels of unemployment. There is not a single family in the United States that hasn't felt it somewhere, either in your neighborhood or with close loved ones, friends, family. It has been very difficult, especially for those in hospitality, the restaurant business, travel industries, other industries that have been affected by the coronavirus pandemic. That is what drove this number up. You guys remember this spring, April and May, I mean, it was like a hockey stick going up. Yeah. Record unprecedented jumps in unemployment. That was bad for the entire economy. So when we see that number come down, so happy to see that. Now, 8-9% still way too high. So let's not throw a party just yet. We've got a long way to go.
Yeah.
But that's good news. And if you're in the housing space, that means people who are working are able to make their payments. They're able to purchase or, sell and go do the things they want to do with their homes. So this is good news for everybody. But Jen, we're not out of the woods. I mean, there's still headwinds all around us. 8-9% still too high. And, little bright spots also mean mortgage rates may start to tick up a little bit. Yeah. Still crazy low, but that's something to watch out for.
Absolutely. And, it's what's good about the unemployment rate. The forbearance rate is slowly going down too for your conventional mortgages from Fannie and Freddie. So that's nice to see. And the federal government has another plan coming up too, Adam. Should be mid-September. Might put more money in Americans' pockets and help them out. Now, like you said, the flip side of that, though, we've seen from the Fed, their plan to they've been doing so great in this economy, right? Helping out the housing industry. But their recent announcement that they're going to let inflation kind of tick up beyond the target rate, that might be an economic pressure that forces mortgage rates to go up. Like you said, we're still at 2.93% this week from Freddie Mac on a 30-year fixed rate, which is amazing on average. It's incredible. But if the 10-year Treasury yield continues to tick up and the Fed has that plan with inflation, that's one pressure that could force mortgage rates up. The second one, Federal Housing Finance Authority, the FHFA, they want to take Fannie and Freddie and make them public companies again. A lot of people remember after 2008, they put them under conservatorship because they didn't have the capital. So the government's been supporting them. Government's trying to get them back to going public. To do that, they got to raise money. And to do that, Fannie and Freddie said they're going to have to raise guarantee fees. Now, we explained the guarantee fees in the Market Update blog because it's a lot to explain on a video. But that's another economic pressure. So if you haven't called a movement mortgage loan officer yet, seriously, make that phone call, because in the near future, it's not going to be like 5% tomorrow, knock on wood, right?
Right.
But
now's the time. I mean, talk to your loan officer, make some decisions today, because in addition to all these economic pressures, folks, there's an election coming up and it's going to be here real soon. And we all know at the end of an election year, things can get a little bit wild and crazy. Policies start getting thrown around. So now's the time to make some decisions. Jen, where can we find the full blog?
That is on movement.com/blog. It is inside the Market Update. If you're looking on all social media, we should have the links here as well. So, hey, some good news though, heading into Labor Day weekend, Adam. There you go. Awesome, guys. We'll see you next time.